So if you run a small business, let me ask you something. Look, when tax season rolls around, are you planning or are you panicking? Be honest, it's okay. For a lot of business owners, tax time feels like getting hit with a bill you never saw coming. You scramble to find receipts, you're hoping that your numbers add up, and every single year you promise yourself, look, next year is going to be different. And the next time rolls around and you find yourself doing the exact same thing all over again. Look, I get it. Taxes are one of those topics that nobody explains to you when you start a business. You learn your craft, you learn how to sell, you learn how to serve your customers, but somewhere along the way, everybody just assumed that you already knew how taxes worked. So you fake it, you react, and you hope for the best. Here's the problem with that. You can't really build wealth on top of a foundation that you don't understand. Taxes are not just a bill you pay at the end of the year. They're one of the biggest levers you have in your entire business. You see, when you understand how they work, you stop reacting and you actually start planning. You start making decisions in March so that you can save money in April next year. You start thinking like an owner instead of a taxpayer. So today I did something a little different. I went out and pulled the questions that small business owners are actually asking about taxes. The most searched, most common, most confusing questions on the internet. And I'm going to answer them in plain English. Look, no jargon, no lectures, just the basics done right so you can walk away actually knowing what you're dealing with. Because once you understand your taxes, you can finally start building the business and the wealth you got into this for in the first place. So let's get into it. I'm Rodney Boswell, and welcome to the Growth and Wealth Podcast. Let's get started with question number one. Probably the most searched tax question on the internet is, what can I deduct as a business expense? Look, I get asked that question all the time, and honestly, it's a great question. And the short answer is the IRS will allow you to deduct what they call ordinary and necessary expenses that are incurred in operating your business. Look, if it's common in your industry and if it's appropriate and it's helpful in running your business, then it's a large chance that it's tax deductible somewhere. We could spend the next 30 minutes making a list. Advertising, software, office supplies, professional fees, insurance, equipment, travel, vehicles. I mean, the list just goes on and on and on and on. Look, I don't think that's what most business owners really need. I think they need a better way of thinking. This sounds like a tax question, but I actually think it really is more a spending question. You see, every business has limited resources. Every dollar truly matters. So before we ask, can I deduct it? I think we should ask something much more important. Why is my business spending this money? I mean, think about it for a minute. Every dollar in your business that it spends has an assignment. I mean, there's the money that keeps the lights on. There's the dollars that help you serve customers. You spend to help you grow. You've got the dollars that build future capacity. I mean, every dollar should have a purpose before it has a tax deduction. You see, tax deductions, they don't create value. It's the business that actually creates the value. The deduction simply recognizes that your business had to spend money to operate. So let me give you an example. Suppose someone tells me they're thinking about spending $20,000 on new equipment. Now, one of the first questions they'll ask me, and I get this all the time, can I deduct this? Well, that's not the first question that I'm looking for. My first question is, what will this equipment allow your business to do that it cannot do today? I mean, is it going to help you serve more customers? It may be able to actually pick up some efficiencies and help improve your team's time in getting things done. You know, is it going to reduce waste? Will it increase profitability? That's a great way to think about it. Because look, if it doesn't improve your business, is it really that important that it's deductible? You know, I'm not sure that that's the best way to think about it. Look, a tax deduction doesn't fix a poor investment. It simply reduces the after-tax cost of making that investment. Listen, my friend, and that is two completely different conversations. Look, one of the mistakes that I see business owners make is believing that tax deductions is where the value comes from, and it's not. Listen, the value comes from what the investment allows the business to become. The deduction is simply one of the benefits that follows, and that's why I want to encourage you as a business owner to think like a builder. You see, a builder, they don't ask, well, how do I create more deductions? What the builders ask is how do I create a stronger business? Because when you focus on building a stronger business, tax planning becomes much easier. The opportunities that'll show up will become more clearer, and the decisions become much more intentional. So look, the next time you're getting ready to spend money in your business, don't start with, can I deduct it? You may end up there. You may go there, and you should have that conversation. But what you really want to start with, how does this make my business better? Because if it doesn't strengthen the business, the tax deduction probably isn't enough of a reason to buy it. But if it does strengthen the business, you absolutely want to take advantage of every tax benefit available. Look, because the goal isn't to just collect a bunch of deductions. The goal is to build a business that creates value. Look, and this is the one thing I want you to remember from this first question. Every dollar should have a purpose before it has a deduction. Before we transition on to the next, I want to circle back to in your industry. That's why the list can go on and on and on, is because every industry has their unique sets of deductions, and that's where having a tax advisor really comes into play. Look, so now let's move on to another question that thousands of business owners, they ask consistently. And at first glance, it really sounds like it's about a tax deduction, but I actually think it may be more of a question about growth, and that is, can I deduct my home office? I get this question routinely. And the short answer is, well, yes, you absolutely can deduct your home office if you qualify. The IRS has very specific rules in this. Generally, the space must be used regularly and exclusively for your business. And for many business owners, it must be your principal place of business. Look, I want you to be attentive. It's got to be exclusive for your business. Look, those rules truly matter. And if you think you qualify, it is truly worth having the conversation with your tax advisor. But look, that's not actually what I find most interesting about this question. Listen, my friend, what I find interesting is why so many people ask it. You see, every home office tells a story, actually. It tells a story of someone who decided to take a chance at someone that they believed in themselves, that they could build something. They were willing to start with what they had instead of waiting for everything to be perfect. Some of the greatest companies in the world started with places that didn't look very impressive. A garage, a basement, a spare bedroom, even the kitchen table. I've been there and done that, my friend. Look, they didn't wait until they had the perfect office. They just started building. And man, I love that. Look, because every business starts somewhere, this sounds like a deduction question, and I get that, but I really think it's a growth question. Look, don't become so attached to where you started that you stop thinking about where you're going. I've seen business owners make decisions because they didn't want to lose some deduction, and that's backwards from where I sit. Look, your vision should determine where your business is going, not the tax code. Maybe your business stays in your home for years. Maybe it doesn't. The better question is, what does my business need in this season to continue growing? You see, for some businesses, that is a home office, and you absolutely want to take advantage of the opportunities for tax savings there. For others, it's, hey, I need an office downtown to make the connections in the relationship. For others, it's, I need a warehouse. Maybe I need some retail locations, or maybe your team works remotely from all over the country. Look, there isn't one single right answer. There's only the answer that's right for the business that you are striving to intentionally build. So if you qualify for the home office deduction, take it. But don't let the deduction become your destination. Let your vision determine where the business belongs. Because here's what I'd like for you to remember. Look, build the business your future requires, not the business your current deduction encourages. So now let's move to another one of the most searched questions in the internet. What's the difference between tax deductions and a tax credit? Now, I love this question. Look, because understanding the answer can save you from making some really poor financial decisions, which can determine the quality of your outcome. Look, the short answer is this. Tax deductions reduce the amount of income that's subject to tax. A tax credit reduces the amount of tax that you actually owe. Now, I get it. That sounds so similar. You're saying, Rodney, that sounds like the exact same thing, but they actually are very different. Let's say you're in a 24% tax bracket and you receive a $1,000 tax deduction. It doesn't save you $1,000 in taxes. What it does, it reduces your taxable income by $1,000. And that means that your actual tax savings would be roughly or about $240 because it's a tax deduction. Now let's compare that to a $1,000 tax credit. You see, a tax credit actually reduces your tax bill dollar for dollar. So here, if you finish your tax return and you have gotten down to the calculated tax and the tax that you owe is $5,000 and you qualify for a $1,000 credit, now you actually only owe $4,000. You see, the tax credit pays dollar for dollar on every one of your taxes. So that's why you'll often hear tax professionals, people in my world, say, hey, a tax credit is generally more valuable than the deduction of the same amount. Seeing the difference from our little example? That's the tax answer. But what I really think sounds like a tax vocabulary question, I think really comes down to a leadership question. Every leader has to learn the language of business that they're leading. I mean, think about it. If you're sitting with your CPA, maybe you're meeting with your banker, maybe you're talking with your financial advisor, and these are key people in your business, in the health of your business, in the success of your business. You're talking with one of these people in your life, and you're reviewing some opportunities, maybe even with your leadership team. Look, the words matter. Deductions, credits, depreciation, cash flow, profit, gross margin, entity structure, enterprise value. Look, these aren't accounting words. These are actually business words. And as the owner, look, you don't have to become an accountant. Leave that up to the accountants. Leave that up to your CPA. It's not in your job description to be the accountant. But what I truly believe that you have a responsibility is to understand enough to ask good questions. You see, the quality of your questions will ultimately determine the quality of your decisions. One of my mentors, I heard him say this during a meeting one day, Brandon Dawson. He said, the quality of your questions will determine the level of your outcome. Look, one of the things that I've learned and watched over the years is this. Business owners spend money because they misunderstand deductions. Don't spend your money. You want to invest your money in the right places. I've watched others, they've walked away from incredible opportunities because they didn't really understand the tax credit. Neither one was really a tax problem. It was really an understanding problem. And that's why I never want business owners to feel intimidated by the language. You can learn it. You don't have to learn it so that you can impress people. You want to learn it so that you can lead better. You want to learn it because when you understand the language, you'll ask better questions. The better questions will lead you into better conversations. It'll carry you even further and it'll lead you into better decisions. So the next time someone tells you there's a tax benefit available, look, don't stop there. Ask, is it a deduction or is it a credit? Look, then go one step further with one more question. How does this strengthen my business? You see, understanding the language isn't really the goal. The goal is becoming a better decision maker for your business. Look, a better decision maker, they build better businesses. The thing that I really want you to remember is confusion is extremely expensive. Clarity actually is profitable. So now let's move to another question. This one makes tax professionals smile all the time because every one of us has heard it. Look, maybe you've even asked it yourself, and that question is, hey, can I run personal expenses through my business? And the short answer is generally no. Now, I know why people ask this question. You know, hey, someone told them, well, just run it through your business. Maybe that's where your money is. You know, or maybe they heard a story about someone who supposedly wrote something off that probably shouldn't have been written off. Now, look, the fact is, and where the true gold is, when you start a business, the tax law does allow certain expenses to be used as a deduction that have both business and personal ramifications or a component. I mean, think about your vehicle. You know, the business gets benefit out of it, so that's a possible deduction for you in a vehicle. Travel. You know, you're traveling for business and can get some personal wins out of it. Meals, opportunities, your cell phone. These are the situations where proper planning and documentation really, truly matters. That's where good tax advice becomes incredibly valuable. But look, honestly, that's not what I want to really get you to focus on, because this sounds like an expense question, but I actually want you to think about it as an ownership question. And you're like, well, Rodney, what do you mean by that? Well, thank you. That's a great question. Here's what I mean. When I work with business owners, one of the first things that I look for isn't just their tax return. It isn't really even if they have a profit and loss statement. I'm looking to see whether there's a healthy separation between the owner and the business, because healthy businesses have healthy boundaries. Look, if you're constantly paying personal expenses from your business account, or you're paying business expenses from your personal account, eventually there's going to be something that happens, and that's going to be that you lose clarity. And once you lose clarity, it is extremely difficult to know how your business is actually performing. I mean, really, stop and think about that. If your business is paying for your family vacation, maybe your groceries, it's, supporting your mortgage, you're just shopping with it, using the business credit card at Walmart or at the mall. Are you measuring the profitability of your business, or are you measuring your lifestyle? Look, and those are really two completely different things. One of the greatest gifts, and please listen to me, my friend, one of the greatest gifts that you can give yourself as a business owner is an accurate, financial information. Look, because this accurate financial information creates confidence for you to make decisions. Look, if it's accurate and you know these things, you'll know when you can hire. You'll know when it's the right time to invest. You'll have clarity around when it's the right time to grow, and even you'll have the clarity around when it's time to just be patient and work on this or process that. But look, you only know those things if the numbers that you are looking at are actually telling you the truth. One of the things I work hard to teach the business owners that give me the opportunity to serve them is to think about their business as an asset. Yes, I get it, and I have the conversation with business owners. Yes, you actually own it. And yes, it does exist. I believe this with everything within me, to create opportunities for you and your family. But your business also has a life of its own. I mean, it generates revenue, it has expenses, it has profitability, it has cash flow, and eventually, if you work at it intentionally, it'll begin to build what they call enterprise value. Look, if you treat it like it's your personal checking account, though, you'll never really know how healthy the business is. So the better question isn't, can I run this through my business? The better question really is, does this expense belong to the business? And that is really a different way of thinking. Look, because when your business spends money, it should be helping the business create value, not simply because the business happens to have the money. And I've watched that more than one time. Look, one of the biggest transitions every entrepreneur has to go through is moving from thinking like an individual to thinking like the leader of an organization. And that really truly starts with respecting the boundaries between the two of you and the business. What I'd like for you to remember is healthy businesses have healthy boundaries. And when you protect those boundaries, you'll gain clarity. Look, and when you gain clarity, my friend, you will make better decisions. And the better decisions will build a stronger business. So question number 5. Look, let's finish with one of the biggest questions I hear from business owners. Had the conversation at the day of this recording, had this exact conversation. Should I form an LLC or an S corporation to save on taxes? Look, the answer is maybe. It could actually be yes to both. And I know that's probably not the answer you were looking for, but look, most people want someone to tell them, oh, yes, you need to become an S corporation, or, every business should be an LLC, but that's just not how it works, my friend. You need to slow down. Look, this may sound like an entity question, but I actually think it's a strategy question. So before we start talking about saving taxes, let's make sure we understand what we're comparing. So let's talk about an LLC. Look, an LLC is primarily a legal structure. It helps you define ownership. It gives liability protection. And look, it's how the business is organized under state law. An S corporation isn't necessarily a type of business. It is really a tax election. It's one of the ways that the IRS allows a business to be taxed. And those are really two completely different conversations. Can an S corporation create meaningful tax savings? Oh, it absolutely can. And I've watched it happen many, many times. I've seen business owners save money by making the election time and time again. But look, I really want you to understand that the S corporation didn't create the opportunity. The business did. Look, as your business grows, as profitability increases, as cash flow becomes more consistent, the opportunities, they absolutely exist to change the way your business is taxed. But I want you to really think about the order of how I said that. Look, the business grew first, the tax strategy followed. Now that, my friend, is intentional building. Look, one of the biggest mistakes that I see business owners make is chasing a tax strategy before they've built the business that will support it. Let me tell you, that will put you on shaky ground and actually can damage your business. Look, people will say, well, I heard someone on YouTube, or I read something online, or maybe a buddy told you sitting on the front porch or over a cup of coffee. Oh, you should become an S corporation. And that very well may be true, but it may not be true. You see, becoming an S corporation also means that there's additional responsibilities. And that's what I mean. It can damage you. Look, when you move into that structure, there's payroll that you've got to think about, or you've got reasonable compensation that you've got to make sure is set up and structured properly. You create additional tax filings for yourself. You've got corporate compliance that you've got to be attentive to. It's not simply just a tax decision. That truly is a business decision. And business decisions should always support the business that you're becoming. And look, that's why I think the better question isn't which entity saves the most taxes. The best question is what structure best supports the business that I'm intentionally building. Look, your business today won't look like your business 3 years from now or even 5 years from now. Hopefully it won't, right? I mean, you're growing, you're progressing, right? So as your business grows, your structure should grow with it. Look, think about it. The right structure at $100,000 worth of profit most likely and may not be the right structure at $500,000 worth of profit. And the right structure at $500,000 worth of profit may not be the right structure when you're preparing to bring on a partner. Your business has made it to that place. You want to expand nationally. Maybe you're looking to sell your business in the next 3 to 5 years, or you're perhaps looking to transition it to the next generation. Look, that's what I want to point out, and I think that this is a decision that's made multiple times. This isn't a one and done. This isn't just a one-time decision. You've got to make this decision ongoing, and it becomes a leadership conversation. Look, every season of growth should cause you to ask, is my current structure still supporting where I'm going? Look, that's a much healthier conversation than asking, well, how do I save taxes? Because your legal structure, your tax strategy, your banking relationships, your insurance, even your leadership team should all be aligned with the future you're intentionally building, not the business that you had 3 years ago. Here's what I'd like you to remember. Structure should support your strategy, not define it. Look, build the business first. Make sure every part of your business grows with it. Have your advisor. Talk with your team. Those are all conversations for you as the business owner. Look, as we've walked through these 5 questions today, I hope you've noticed something. Look, these were all posed as tax questions, but were they really tax questions? I think, and I'll tell you, my friend, these were actually business questions, leadership questions, decision-making questions. So, my friend, if today's conversation helped you think a little bit differently, can I ask you to share this with another business owner? Look, because chances are they're asking the same questions. And maybe what they need isn't just another tax answer. Maybe they simply need a better way of thinking. Hey, I'm so grateful for you spending the time with me today. I'm Rodney Boswell, and this is the Growth and Wealth Podcast. Until next time, think better, build better, help someone else do the same, my friend.